Hello, traders. Happy Thursday. I was trying to get Jacey on a little bit of a switcheroo like I did yesterday, but he caught me out real quick. So it is Matt, it is Jacey with Empire Algorithmic Trading, and we are here to bring you your daily dose of Vwapvision's Stock Talk. And what a stock talk it's going to be.
Yeah, that's right. So we use the daily, I'm sorry, we don't use the daily. We use the anchor volume weighted average price daily to tell us who's in control, buyers or sellers, and what a ride we've been on. I mean, yeah, let's get to some stock talk, shall we?
Let's get to stock talk.
Matt, it's amazing how quickly a person can adapt. The market, three weeks ago, if the S&P was down over 3% and the NASDAQ was down over 4%, I'd be going, holy shit. Today, I was like, well, that's not bad. Oh, that's okay. That's all right. And
That's not the worst
so
I've seen in the last 5 days.
oh my gosh, the volatility in, and I'm freaking exhausted. It's been a lot, man. It's been a lot this week. So I'm looking forward to tomorrow, the end of the trading week, a little bit of weekend. Got a new season of Black Mirror coming out tonight on Netflix. I'm super excited about that. And of course, it's my favorite time of the year. It's Masters Week. So one of my, I love the players, the Masters, the U.S. Open, British Open, PGA. Right, five weeks out of the year are my Super Bowls. So I love it. I was watching a little bit of golf earlier. It's a lot funner to watch, a lot more fun. Not funner, that's not even a word. A lot more fun to watch than in the market today. But let's just take a look at some charts and see what it looks like.
Yeah.
All right, so similar to yesterday, I want to start with the bond market because I think this is going to be foundational. So we're just going to make this kind of priority. We're hitting a danger zone here, and we're starting to trade on the IEF below the VWAP. We can break that. It's when we start trending below it, when we start living below that, is when we start running into problems. So we're going to want to keep a close eye on that. It's not encouraging to see a nice sell-off in bonds. We've talked about that consistently over the past couple of months. And I firmly believe that that is the leading indicator, leading cause of what woke Trump up yesterday. So we'll just pay really close attention to that. The S&P 500 was down 3.4% on the day, significantly lower volume than yesterday, which is kind of a surprise. I was kind of thinking, man, how wild would it be if we actually got larger volume than yesterday? But
Yeah.
fortunately, that was not the case. Just a lot of volatility going on here. A big battle between buyers and sellers. One could make an argument. We've got some higher lows here. We've got an inside day, so that could be a pretty bullish setup. You've got a long lower shadow on the candles here, which means that buyers lifted it up throughout the afternoon, or at least off the lows, right? So, the Nasdaq actually did bounce right off of its long-term VWAP. We have a consistent higher low, so we do have a clear bottom here. So whether or not that maintains, so what we're going to want to look for is for that low to hold, and pretty much the same thing with the S&P 500. The S&P 500 is a little bit more volatile, not nearly as evident, although those lows are very clear, lower or higher on the chart pattern. That's strength, right? It means buyers or sellers are running out of strength and buyers are losing patience and coming into the market to support a little bit more. So there is some bullish indicators there. It's just whether or not we can maintain this momentum. So don't get concerned about trying to find the bottom, about trying to buy the bottom. That's not what you want to, that's not what we're here for. We want to make sure the bottom is established and we start seeing a trend. That's when you want to start putting your money at risk because that's when you have the probabilities in your favor. So right now it's all about risk control. And right now with the volatility as crazy as it is, the least risk is to simply not trade and simply not be a part of it. So that's why we're still in cash. And also there's just really nothing setting up. There's nothing apart from gold stocks, which we'll take a look at, went on a tear today. But all in all, there's really nothing because the whole market's just getting crushed, right? Like yesterday was another day. The algorithm didn't find a single buy or a sell signal, and that just kind of tells you the no man's land that we're in right now. There's just no clear trend simply because the volatility is just all over the place,
Mhm.
particularly this week. So it's been a little bit exhausting. Again, same thing with the mid caps. Not quite as picturesque on I'm sorry, these are the small caps. Not quite as picturesque on the small caps. We're seeing a little bit of a flat bottom, but not those higher lows. But seeing some resistance at some upper VWAPs there from its previous high, and I believe that's from a previous low as well. So not as bullish there on the small caps. And I think we're going to need all of these indexes to participate. I mean, the rally that we had in January was basically led by the mega caps, by the large caps, the S&P 500, the small caps, and it was tough. We weren't quite in that good environment where it was more of a, well, which one's going to fail, which one's going to be, it was just more difficult. When you get into a good environment, it just turns into what stock's going to go up faster, right? What stock's going to go up
Yep.
more. And we haven't been in that for some time. And to get there, we're going to need all of these indexes firing on all cylinders. So, it's just like I said, it's just sit back, relax, let things settle out. And the mid caps are finding some support, but again, not as picturesque as the rest. But we're just going to hope that this is the bottom. Get some structure. We want everything to tighten up. We need that volatility to come down. We need some sanity to come to the markets and let it tighten up. Get a little bit of an upward trend. It's not going to take much, right? Especially on the S&P 500. Just get a little bit of a trend. Get that momentum going. Get through the resistance, and once we get past that resistance, then we should be able to get moving forward in the right direction. So it is just a matter of time. It's just how long that's going to take is the trillion-dollar question. So, of
Well, and one
course.
of the one of the interesting things that have come out too, guys, is we've had a couple people reach out to us and ask us, "Do you think this is the bottom? Is this the bottom? Is this the bottom?" And to be fair and square, we're not bottom chasers. That's not what our model and our thing is. If you want to do that and risk your money, that's fine. That's up to you. We don't partake in that, so we're not going to sit here and advocate for it. So I just want to make that clear as well as we are not trying to buy the bottom and ride it up. We are looking for stocks that are already showing strength, that are moving in the right direction, that have some consistency, that we can ride the rocket ship high and get out high to make our money.
Yeah, absolutely. I like to see, we built it we sacrifice a little bit of return for more probability. And there's always a trade-off, right? Just like with trade deficits, when you have a trade deficit, you tend to have a capital surplus. So those things tend to balance out. And when you decrease the deficit, eventually you're going to decrease that capital balance. And so, just like risk and reward, the higher the risk, the higher the reward. And so, same thing, just like probabilities. The higher the probability trade, the lower the returns. The lower the probability, the higher the returns. So, if you want, you could definitely, like, if you're thinking this is it, I'm down, I'm up with this, even though it might be a 30% probability that this is the low, and that very well could be high. Your low in that case, your stop loss is simply the low, right? And so that's what is that, about 7% from where we're at right now. And so, really that's a low risk trade if you look at some big, a lot of models say, 8 to 10% cut your stop loss, right? So that's well within, especially when you think, hey man, this thing could rocket off, 50% from here, a 7% risk for potential 50% gain or infinity gain, really, because stocks can go up forever. That's a low risk, high reward trade. It's the probabilities that we take into account. And so, that's the way you would want to trade that. That's just not how we built the model. We built the model off of the classic cup and handle, double bottom, wait for the stock to clear resistance. We just modernized it a little bit to take the VWAP into play and bring that resistance point more into where the dollar, the average trader, the average buyer has actually bought the stock. And that's the actual resistance that we're looking for. Technically, yes, the stock still might be below its all-time high. We still might have some price levels, but on an overall relative basis, if the average holder if the average holder is in and the stock is above that, means that most likely it's hitting new all-time highs and it's likely going to continue moving higher. So it's basically just a modernized version of the old classic, for example, Bill O'Neill's method of cup and handles, buying the breakouts. It's just a newer adaptation of that is what it is. And the same thing with that old technical analysis. They never bought at the bottoms either. You want to see those stocks set those bottoms, move up past that, and then move into new high territory. I do know there are some very successful traders that just watch for the all-time high, and that's it. Just set a line across that, and they won't even consider it until it crosses that. You're giving up massive amounts of gain. We're just lowering that bar a little bit. We're taking some of the risk out of it. Yes, there's still a probability of its failure. It's just lower when we get into it when we do, because that trend's already established. The selling has already gone out. Now it's just a matter of handling the volatility and identifying any potential shifts and trends. So that's what we're looking for. It's fun to try and pick the bottom. It's fun to call the bottom, but that's not how we trade. But if you were going to
Nope.
trade, just use the flip and low that we see right here and call it good, right? It's not. It seems very simple, but then you got the anxiety, and it's just not the smart risk averse thing to do. You need to manage your risk. That's the whole name of the game. Manage your risk and put the odds in your favor. And right now, the odds are not in your favor, and you're not properly managing risk simply because the odds are not in your favors. And my dad always said it's like trying to catch that knife. You just never know if you're going to catch the handle or the blade. So thank you for bringing that up, man. I appreciate that. Hopefully, together we kind of clear that up a little bit for anybody watching. But it's fun to watch. It is fun to watch.
Mhm.
But let's just take a look at some more stocks today. There were
Yeah.
really gold. Gold just went on a tear, and so a lot of the stocks. When I was looking through the watch list, I just noticed a theme, and they're all the gold stocks. Triple flag, new all-time high. It broke out during the red zone. It's held up remarkably well. Idaho Strategic Resources. I felt at the time that this might have been a little bit of a laggard, which was kind of a flag compared to its other peers in the group. But clearly, I was very wrong about that. This stock has held up quite well, especially considering the extreme volatility in the market sell-off we have. Same thing with Royal Gold. It's been doing quite well since its breakout. I can't remember exactly where that was. Newmont Corporation shook you out, but then it's quickly recovered. Eldorado Gold, same thing. It had a pretty hard sell-off last week. Found support right at the VWAP. Look at that. And then
Bounce.
it just did a trampoline bounce off of that. I'm calling that the Matt Hastat trampoline bounce special right there. Alamos Gold, same thing. It had a quick reversal yesterday, or I mean last week, or this week I should say, and then racing off into new highs. Same thing with Anglo Gold. That looks almost exactly like gold's pattern itself. And then GFI, it was a breakout, ill-timed breakout there. It did get flushed out, but it has quickly recovered. And that's a very frustrating pattern right there because the prudent play is, hey, if you got into that, you're getting shaken out, and then all of a sudden it's back in new high territories. You're just going, you truckers. But anyhow, this is the pattern that I'm seeing mostly across the board. And the reason why I bring this up is if it's not in a clear downtrend, a lot of what I consider good-looking stocks have this kind of pattern. So this is a double bottom. This is your classic double bottom, and we're just going to draw some lines on here. A double bottom is your first leg down, and it literally creates a W. So you just draw a giant W on the chart. And then you have your second leg up, which looks like that. And then you have your second leg down. Now, the key is you want the second leg down to be lower than the first leg. That means that it shook out, like we talked about yesterday, it shook out the buyers. There's all these people that buy here are using this as a stop. You trigger a bunch of stops. The institutions sell that off, knowing that they're going to buy it below that level. So they push the stock down here. The other key that you're looking for is it starts to rally back up and you start seeing higher lows. And that's exactly what we're seeing with Rubric. And that's what we're seeing also broadly kind of in the general market trend these past couple of days. So this is a real good example of how the general market can influence a stock's trade. As we've seen the general market do higher lows these past couple of days, you're seeing the same thing from Rubric. And it's also almost identical to the S&P 500 and the NASDAQ composites trade. The other thing you want to look for in a double bottom is where the middle peak is. You want it to be within 15% of the previous high. So those are some of the key functions you want to look for a double bottom. That's what I'm seeing. The only flaw that I'm seeing is quite a few of the middle peaks are 20 to 25% below the previous high. So that's going to tell me that those are probably going to fail. We're probably going to need to see some digestion. A lot of the VWAPs are kind of right underneath that high. So they're in between the lows and that high. And so we're probably going to see some digestion around those VWAPs. So any initial trade above that VWAP is probably going to fail. The true leaders are
Okay.
just going to run, right? Maybe 1 out of 5 is just going to take off. But most of them are just they're not going to completely fail. They're going to shake you out just out of protection wise. But it doesn't mean they're going to completely roll over and make new lows. So you got to keep them on the watch list, which we tend to do. The algorithm will keep watching. It'll say, all right, now it's giving it another run. It's going to try again. And hopefully this time, the second time, it might even take 3 or 4 times for that stock to clear that digestion out, get rid of all those sellers. I haven't figured out the magic key, right? Like I haven't been able to predict the future like that, but there are some signs. Higher lows is a pretty consistent pattern. Lower highs is another consistent pattern. So that's what you want to start seeing, particularly around. You want to see price tightening and then some higher lows, particularly around those VWAPs. If it starts living above that VWAP, that's all the better. It means it's building a base above there, and then when it takes off from that, they tend to go on some pretty significant runs. You could see 30%, 40 or 50% in a matter of weeks, if not days. So that's the kind of stuff we're looking for. Right now, we're just in that building process, and so this is why I wanted to bring that up to just let everybody know this is what you want to look for. This is the kind of stuff when you're looking at charts, you see something like this, put this on your watch list. Or you don't even have to do that. You could just subscribe. We have a computer that does all this for us, which is amazing because you just get an email and it says, boom, these are the stocks out of 6,000 stocks that are being bought today. And so it's pretty spectacular. I love the tool. I think it's great. It's really made my life a lot better. It would just be if the market would get along and go along with us, it would be all the better there. So that's just it, man. That's today's stock talk. I was thinking about talking a little bit about the tariffs, and I just like, you know what? I don't want to. It's just so asinine. It doesn't make any sense at all, and we're just gonna have to sit back and wait to see what the hell happens. But in the meantime, let's just keep studying. Let's keep adding. Like I said yesterday, if you follow the fundamentals, right? You follow the earnings growth, you follow the sales growth, you follow the volume weighted average price and the stock's price, that model will get you into the best stocks in the market exactly when they're being bought. And that's all you have to pay attention to. You don't have to read anything. You don't have to follow the news. You don't have to know what's going on with inflation or the GDP. It all comes to play in the volume weighted average price. As long as you understand what the prices are doing in relationship to that, you'll have a good understanding of what's going on in the market. And that's what we're trying to help everybody understand.
Absolutely. And so if you want more information, guys, make sure to subscribe over on our Patreon. It's patreon.com/. Empire Algorithmic Trading. What you get with that is you get access to our algorithm's daily buy and sell signals. You also get some educational videos, and you also have a really cool community there where you can ask us questions about specific stocks. If you want us to run on that, again, we are not advisors. We can't tell you what to do or what not to do, or let you know that we think this stock is going to be the next greatest thing to ever hit the earth. We're just a couple guys that like trading and like showing what we're doing with our money while this is going on. So Empire Algorithmic Trading over at patreon.com. You can subscribe us here on YouTube, Spotify. We're on all social media, Facebook, Instagram, X, Blue Sky. And for more information about who we are and what we do, visit our website, vwapvision.com. That's VWAPvision.com. And other than that, Jace, what is happening in the next week here? We should give everybody a little bit of a heads up.
Yeah, yeah. Well, Maddie, I hope you have a great trip with the family next week and
Thank
enjoy
you.
enjoy sunny Arizona. I've always wanted to see that part of the country. Have spent very little time down there, so enjoy. Take lots of pictures. Tell me how it goes. So Matt's going to be off next week, and I'm going to be out on Monday. So there will be no stock talk on Monday. I'll be back at it on Tuesday, just for a couple of quick looks at the charts and the indexes and see what's happening. But for the most part, Matt will be off and it'll just be me. So happy trading, everybody.
Happy trading, everybody. We'll see you for our weekly roundup in a couple days.
All right. See you, Matt.
See you, buddy.